very good track record. When the economy does go into recession, the bond market says, see, we are now in a recession. You ignored it, you downplayed it, and yet whenever you see an inverted gross tweeting today about this, it's not good. I mean, the real key thing in finance is you want a positive sloping yield curve. If I'm lending money for 5 years or 10 years, I should get a higher interest rate.
It's not logical,
than
right?
twos. It's not logical. It's
right.
a bit like negative yields from a few years ago, right? At one point, we're nearly 20 trillion of negative yielding debt, and everyone's going, well, is this the new normal? And people go, this isn't normal.
Right.
So, I mean, I think, looking at the yield curve, it will steepen, it will normalize. And in fact, the Fed wants it to normalize because that's a healthy banking system, a healthy financial system.
Normal.
No.
Those are the T-shirts and hats I'm getting printed up. We're going back to normal.
Okay. Well, I know some people on the Fed who would buy it.
And then there's the normal with quotation marks, as we know. Michael McKenzie, thank you so much. You really are keeping us honest and true when it comes to the movements that we've seen, and there have been a lot of them in the U.S. Treasury trade. Michael McKenzie, he's rates reporter at Bloomberg News here in our interactive broker studio. This is Bloomberg.
Well, we're moving on now. We're moving on up to the east side.
Well, I got to say, one sector we're keeping a watch on is Fed and the U.S. rate moves, but who's also watching it is the real estate industry, which kind of brings us to a story, a really great story that is, I believe, still the most read on the Bloomberg all day.
I think depending on who you are in the real estate industry, the Fed can do whatever it wants, rates can do whatever it wants, but if laws and regulations change, then that's a much bigger deal.
Exactly.
And that's exactly what we're going to talk about. Hey, we got the most read on the Bloomberg, among them, today's big take, written by Bloomberg's Patrick Clark and Prashant Gopal. Pat is Bloomberg News real estate reporter. He's here in our Bloomberg Interactive Brokers studio. Pat, good to have you with us. Carol asked me earlier in the program, New York City apartment buildings are going for 50% off. And she said, hey, sounds pretty good, right? And then I said, you know, if it sounds too good to be true, then it's probably too good to be true.
Yeah, indeed. I mean, I think there are a lot of sales of these rent-stabilized multifamily buildings.
Rent-stabilized multifamily. That's the asterisk.
Caveat.
That's the first asterisk, yeah. And, you know, these are apartments where there are strict rules about how much you can raise rents. Not only that, the rules changed, right? From the mid-1990s up until 2019, you could raise rents quickly. These became really a favored asset by, for investors. This was where the opportunity was because there were pathways to deregulating the apartments, and then you could push rents to infinity, and there was a lot of money there. So investors would pay higher multiples for these buildings. The rules changed. All of a sudden, the things that they would do to push rents up and make the buildings more profitable for themselves were not allowed anymore. And, as a result, and I would say, COVID played a role, inflation played a role, especially on insurance costs, and interest rates at the end of the day are the thing that I think probably pushed these owners over the edge. But, people would sell buildings for large discounts, maybe 50% about it. And Prashant and I thought about this as really a pendulum swinging, and this goes back, at least a century where, New York City has grappled with housing shortages, for at least that long. And when housing is 1920s, it happened again during World War II, and then again in 1969, 1974, where government interceded and said, effectively,
knock it off.
This is too much, right? And New York City, unlike most places in the United States, is 2/3 renters. So renters have a lot more political power here than they do other places, and it's a pendulum. I mean, I think in 1990s, there was a deal struck, and one of the reasons why this asset class went towards deregulation was because there was recognition that the housing stock went to rents. They've gone way up.
Right.
And, by the 2010s, there was really an acute issue again.
I feel like everybody who's a New Yorker, or whether they live here or not, or has a friend who's, I know people who've fought, legally to hold on to their rent, stabilized apartment, or I know other people.
Well, I mean, I guess what I'd say is rent control is famously hated by economists, right? There was a Swedish economist who said something along the lines of it's the most efficient way to destroy a city short of bombing it, or something like that.
Ouch.
And this goes back a way. Even, liberal economist Paul Krugman, wrote a lot about this years ago, where described reasons why rent control is a problem. And I think the basic ideas are, one, it disincentivizes investment, and two, you wind up in a situation where people are hoarding rent-controlled apartments, like you just mentioned, and that makes that increases competition in the rest of the housing stock. The flip side to this is we don't have enough housing, right? We don't do a good job of building new housing.
Right.
So, and this was a thing somebody told us, which is like the current system is not serving renters well. So there are some people, I think, who are increasingly kind of picking a middle ground, and caps on rents that are probably less stringent than the system that New York put in place, but which are greater than zero. I mean, this is a thing which is coming before legislatures all over the place, whether at the state level or municipal level. There's dozens of places that are considering new rent regulations every year, and
Pat, can I just ask you though, because we only have
Of
about 30,
course.
40 seconds, but part of the tricky thing, I think about the Uber model, right? Rates go up, more cars come on, the rates go down, right? And there's more cars for everybody.
So we're told.
But in cities, rents go up, you think people are going to build, there'll be more property, rents will come down, but there's also a limited amount of land here. So that kind of complicates that equation. Just got about 30 seconds.
Yeah, exactly. And I think that's the hard thing here. And it's not a given. I mean, the worry is that you starve buildings of investment, and then the housing stock, gets degraded, and you get other problems. But in fairness, we haven't exactly, that hasn't totally played out yet. And if it does, the pendulum will probably swing it back in the other direction.
And the sad part is, I feel like with major cities, San Francisco, New York, you pick it. Like, we've been talking about the lack of housing, affordable housing, for decades. So it's obviously a big issue. Great story. Thank you. Pat Clark, real estate reporter at Bloomberg News. It is among the most read stories on the Bloomberg all day, everybody. So head to Bloomberg.com. Check out the Bloomberg Big Take, and also at Bloomberg.com/Big Take. Carol Master, Tim Stanovic. This is Bloomberg.
It's 3:21 on Wall Street from Bloomberg World Headquarters. I'm Charlie Pellet. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ 100 index, all in the red right now. We've got the S&P lower by 13, drop right now 0.3%. Dow Industrials down 237, a decline of 0.6%. NASDAQ Composite Index down 40, lower by 0.3%. Russell 2000 hard hit today, down now by 1.1%. 10-year 4.16%, the 2-year 4.47%. Gold down $15 the ounce to 2024, drop there of 0.8%, while West Texas Intermediate crude is up 0.7%, 72.77 a barrel. Investors today are digesting Fed Chair Jay Powell's remarks last night on 60 Minutes, in which he again poured cold water on a March rate cut. Cameron Dawson is Chief Investment Officer at New Edge Wealth.
Valuations have expanded by about 20% since the October low, really pricing in this idea of an easier, more friendly Fed. So if the Fed doesn't deliver on those rate cuts, do we start to see downward pressure on valuations, which stand at 20.7 times forward, which is very elevated from a historical basis.
And you can hear more of the conversation with Cameron Dawson on the Open podcast. You can download it wherever you get your podcasts. On a down day for stocks, Tyson food shares are up 2.3% now. Tyson posted quarterly earnings that beat even the highest of analyst estimates, with improving results from its chicken, pork, and prepared food businesses, more than offsetting losses at its beef operation. Tyson shares right now, they are higher by 2.3%. Recapping stocks lower, S&P down 11, drop now of 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thanks so much for that update, Charlie Pellet. Really do appreciate it. Carol, I don't know if you saw, but late last month, we got earnings from one of the dominant companies when it comes to the cloud space. And the company's shares hit a record high. We're talking about SAP. After the company raised its 2025 free cash flow guidance and announced a restructuring program that will affect 8,000 jobs. We also learned the company's current cloud backlog, and that's why I bring this up. Current cloud backlog, which is an indicator of cloud revenue to be booked within the next 12 months, saw accelerating growth in the fourth quarter, signaling robust demand for its cloud-based software.
All right, we knew we wanted to know more. So we've got back with us, Julia White. She's Chief Marketing and Solutions Officer over at SAP and a member of the Executive Board, joining us on Zoom from Seattle, last on with us in July. Hey, great to have you back with us, Julia. How are you?
Here in Seattle.
Oh, okay. Oh, okay. Sorry, we got clipped a little bit. Oh, so you're doing well. So talk to us a little bit about the overall broad environment, because it does sound like, coming off your earnings, optimism from the company overall. We just want to kind of start there in terms of what you are seeing, because we've talked a lot about the cloud over the last week or two with a lot of big names, whether it's Alphabet, whether it's Amazon, whether it's Google, like a lot of them reporting. So tell us, more in terms of what you guys are seeing from demand.
Absolutely. I mean, it was a strong year and a quarter for us as well, as to your note. And it really is that time where customers are shifting fully to a cloud-first strategy. I think that's been true in some parts of their technology, but now really into the business application, right? The place where SAP particularly works, and the importance of moving to a cloud first. And of course, we couldn't not talk about how AI is a key part of that as well, and helping drive that and enable that too.
I also want to talk about big picture here. Carol, when I was preparing this, Carol put some notes in here about looking at the competitors here. So like Microsoft Cloud, Google Cloud, Amazon AWS. I went to our own Bloomberg Intelligence just by pressing BI Go on the Bloomberg terminal. And here, there's a theme that I see when it comes to our analysts writing about the cloud. Our analysts on Microsoft Cloud, they write a rebound in cloud and more AI workloads to gain high teen sales annually in the next 3 years. On Google Cloud, they write about YouTube and cloud partially offsetting slowdown in search because cloud is benefiting from AI tools and a rebound in IT spending. And then Bloomberg Intelligence on Amazon AWS, enterprise spending ramping back up. So the theme really that I'm seeing here, Julia, is a rebound when it comes to the cloud. Talk to us what you're seeing at SAP outside of what you're doing at SAP that shows there is a rebound happening when it comes to this IT spend.
Absolutely, and like I said, all those players you mentioned are cloud infrastructure players that had boomed during COVID, right, and leveled off, and now AI is driving a new wave. And we're in an application layer, so similar, but a few different trends. We've seen customers like picking up their existing SAP system and running them on a cloud, but that's not transforming their business, right? They're just doing the same thing on a cloud service. Now they're the cloud first approach, and again, back to AI, if customers want to really change their business model, right? Like Tech Mahindra was selling cars in lots, now they're selling them online at much different scale. You need different technologies, you need different application experiences to enable that. And we've been really clear that really the only way for customers to get the latest and greatest AI is to use the cloud-based applications. And so again, that's helping, people who were thinking about it, maybe going to do it later. Now they're like, now it's time, right? It's time to do it now, because if my competition gets this new AI capability and I don't, guess what? I'm going to fall behind.
Is there certain application software that people in particular are tapping into in this environment that says something about their focus specifically?
I think, when you change your business model, right, going from, say, like maybe products to a service business, and you have to think about all the parts of your business processes that change, how you account for things, how you reap subscriptions, right? How do you provide service end to end? All of those parts of the business have changed, which means all the business applications they use have to also change. And so obviously the things SAP does, right? The finance and accounting and asset management, supply chain, human resource management, all those pieces are affected as well.
We love talking to people like you because you have a good insight into what your customers are saying about how much they're willing to spend, what portion of their revenues are going to this type of spending. How would you characterize it in 2024 and how that's changed in recent years? We certainly saw a ramp up in 2020, 2021, but what are you seeing right now?
Yeah, I think the IT spend kind of leveled off in 2023, as you see. As we go into 24, we see more increase in spend generally. If you look at all the CIO surveys or the IT surveys in general, last year people kind of cut programs to experiment with AI. We saw that. This year they baked that in, and they're planning to invest particularly around AI-enabled experiences.
My understanding coming in here that you kind of had three main macro trends for 2024. We've hit on some of it: generative AI, competitive pressure, a second thing that is a real big trend this year, and the third being economic uncertainty, putting businesses under pressure, driving them to adopt efficiency at their core. Go down that avenue or that rabbit hole with me, if you would, because I'm trying to get an idea of how much uncertainty. Like, give me an idea of that economic environment. Is it akin to, I don't know, another moment of uncertainty in our recent history?
Well, what we see with the uncertainty is, particularly in the area we serve, people are still making choices. It's just taking longer, right? They're really having to show the return on it. They're having to prove it. And also we're seeing that they're being more collaborative in the groups within the company to make a decision to invest in something. So it's just changing the decision-making processes when there's uncertainty, right, in terms of the criteria. And to your question of a recent time of I could think of was maybe when the cloud started to level off, like around COVID, where people weren't quite sure what to do.
Oh, yeah.
I don't think it's quite as dramatic as that. And I also think the economic indicators are starting to look better. And so people are starting to go, but again, the criteria for making a big investment in a technology decision, I think the bars have been raised.
How much opportunity is there for new business? Not just increasing business from existing customers, but who is left who hasn't made the transition to the cloud?
Well, again, people might be using some cloud in their organization, but not necessarily for the core of running their business, right? So we still, about half of our, we have our hero offering, Rise with SAP core kind of ERP system, half of that's coming from new customers, not existing customers.
Is there a certain type of business, though, that like a certain size business, type of business that has been, I mean, in my view, and I don't work in IT infrastructure by any means, but this tech has been around for a while. Like, why have these companies waited until now?
Yeah, we definitely see more in the mid-market kind of growing companies are coming up, or newer companies, frankly. A lot of companies try and go as far as they can using things like Excel to run their finances, right? And it just breaks at some point, and then they need to flip over and use a true kind of business application.
Interesting too, and I know sometimes it's hard to share, information about some of your customers or clients, but I know one that you, I think, are willing to is what's going on with Mahindra. Talk to us about them. It's a well-known company, massive multinational organization based out there, based in India. So what is it specifically that you guys have done with them to give us kind of an idea of maybe the types of projects that you're working on with some of your customers?
Yeah, that's a good example of not just doing the same thing somewhere else, but doing it fundamentally differently, right? When they first launched their very first SUV in India, now again, they sold it just in lots, the traditional way. And their rate back then was, selling one car every 30 minutes, right? That kind of a rate when they first launched, right? Then they shifted and said, no, let's go digital, let's go e-commerce, let's go online, let's scale with cloud capability. We can go global that way as well. So then they just recently launched their new SUV. They sold 100,000 cars in the first 30 minutes, as just a contrast. And it's certainly the scale and the global reach, but it's also about just embracing a new business model. And that's, to me, a wonderful example of doing both quite well.
Wow. So, I mean, it's Carol, it's interesting that, again, I go back to the idea that there are so many companies out there who haven't yet leveraged the idea of, doing this stuff in the cloud. And it just makes me think like, okay, well, even though we're talking about it every day and all the companies that we cover have been in it, I mean, look at AWS has been doing this for years.
Right.
There's still companies out there who are not doing this.
Right. And as Julia points out, kind of the distinction, right? And this is what we talk to about whether it's AI, like who benefits. Maybe it doesn't matter. Right now people are kind of banking on the infrastructure part of it. And you think about AWS or Alphabet, that is a lot, largely the infrastructure, but then you need programs that work on top of it, and that's where a company like SAP comes in. Hey, Julia, always good to check in with you, so really appreciate it. Be well. Julia White, she's Chief Marketing and Solutions Officer over at SAP, joining us on Zoom from Seattle.
Hey, let's go to Washington, D.C. now for a check on latest world and national news with Nancy Lyons in the Bloomberg 99.1 newsroom. Hey, Nance.
Hey, Tim. Buckingham Palace says King Charles has cancer and will postpone public activities while he receives treatment. No word on the form of cancer, but in a statement, the palace says it's unrelated to the prostate issue he recently had treated. Bloomberg's Carolyn Hyde reports the king will continue to fulfill his head of state duties.
The behind-the-scenes work will still be there, but of course, from a geopolitical perspective, from being the person who can go out and talk to the public or indeed make trips abroad, that will have to go to the backseat.
Bloomberg's Caroline Hyde reporting royal officials say the 75-year-old king chose to share his diagnosis to prevent speculation and in the hopes that it might assist public understanding for those affected by cancer. President Biden says he plans to place a phone call to King Charles. Residents in Southern California say they've had enough of this atmospheric river phenomenon they've been experiencing. This is the second in a week. Over 1 million residents in and around Los Angeles, including the Hollywood Hills and Beverly Hills, have been under a flash flood warning today. This is Los Angeles Mayor Karen Bass.
Yesterday marked the 10th wettest day in the history of this city since recording rain amounts in 1877.
Putting it another way, the city has seen 6 months of rain in just 48 hours. A Michigan jury is deliberating whether to hold a high school shooter's mother partially responsible for the killing of 4 students in 2021. Jennifer Crumbly faces charges of involuntary manslaughter for allowing her son Ethan to own a gun. He's serving a life sentence without parole. And the firefighter who stood next to then-President Bush on top of a fire truck after 9/11 has died at the age of 91. Bob Beckwith passed away in hospice after dealing with cancer. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons.
Bloomberg World Headquarters, I'm Charlie Pellett. 340 on Wall Street. Stocks lower across the board. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks in the red, but well off their session lows. The Dow's currently down 206 points. S&P's dropped 10, and NASDAQ is lower by 31. The U.S. 10-year yield at 4.16%. Gold is down 14, oil trending in the green, and Bitcoin is lower by 1%. Among the main 11 S&P sectors, only healthcare, tech, and energy were in the green. Materials and real estate were under pressure, and leaders to the upside in the Dow, Caterpillar and Apple, while McDonald's and Walgreens led to the downside. In other news, DocuSign dropped intraday on a report that private equity interest has cooled, and after earnings, Estee Lauder rose 13%, on Semi rose 9%. Wrapping things up, some of the names sporting after the bell tonight include NXP Semi, Palantir, and FMC. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type squawk, SQUA on your Bloomberg terminal. I'm Charlie Pellett. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, folks, just got about 18 minutes left in today's trading session. Heard Charlie breaking down the numbers here, bouncing around here, down across the board on the equity side of things, but we're definitely off our worst levels of the session. And it really has been largely about what's going on in the Treasury trade following Jay Powell on 60 Minutes. Again, some strong U.S. economic data, specifically on the services sector, so important to the U.S. economy. And so you see yields pretty much hovering at their best levels of the session. I feel like we're being a little bit managed, but we're also being reminded by Fed officials, Jay Powell included last night, data dependent, folks. So we're going to watch
Data
those
dependent.
strong.
Have I heard that before?
Yes.
Did you come up with that, Carol? Did you come up
Data
with that?
dependent. Buy the T-shirt and the hat.
Somebody get Jay Powell a tattoo that says data dependent. Hey, I'm really curious what Dana Dioria has to say about all this. Dana's co-chief investment officer of Investnet. They got about $375 billion in assets under management. Dana joins us from Pennsylvania this afternoon. Good to have you with us. How are you looking at what we heard from Fed Chair Jay Powell last night versus what we heard from him last Wednesday? Did you see any difference between those two messages?
I think it's just a doubling down, and it was odd. The market had kind of, I thought, to a certain extent priced in that there would be no March rate cut, but they don't like hearing them keep focusing to these comments came after more fantastic data on unemployment, where I think the market is kind of accepting the fact that in fact it might take a while, maybe not even after March, right, that we're going to see these rate cuts. So we're still seeing rate cuts priced in, of course, but I think the market is coming to grips that it's certainly not going to be March, and it might not even be soon thereafter.
It's interesting, though. I always think about, after a Fed meeting, Dana, about that big table and the Federal Reserve and the kind of conversations that they have and the kind of debates. And I think about someone like you guys as well. You've got $375 billion in assets under management. It's a lot of money. Your clients and investors turn to you all. You and your team, what are the kind of discussions and really kind of smart debates that you are having right now about kind of what happens next over the next 6 to 12 months?
So we are a platform, and that number that you're putting out that we're referencing is our TAM. So there's many asset managers under there. So we are able to see what different asset managers have to say about, to your point, what's going on in the market, as well as research. A lot of different pundits. We kind of sit at a nice aggregation point for that. And it's been a lot of. If I were to give you kind of the aggregated bubble up of what you get out of that.
Dana, hang on a second. We're going to just try and fix your audio because it's a little bit muffled, and we just want to make sure that everybody can hear. So I'm going to let my team work with you for a second and just try and fix that up. In the meantime, we just want to do a quick check on the markets because we have talked about traders sending bonds sliding once again, stronger than estimated economic data. That was something that Dana just kind of talked about, and signals that the Fed isn't ready to call victory over inflation just yet have really once again gotten a sell-off in the Treasury trade, and you've got a 10-year right now with a yield of about 4.16, and you've got the shorter end most susceptible to what the Fed is going to do or not do at 4.47, below 4.5%, but just below it.
And on the equity market side, we're seeing the S&P 500 down just about 0.2%. We can round it up to 0.3%. It's actually surprising to me, Carol. We saw at one point today down more than 0.8%, and the Dow was down significantly more than it is now. Dow down 0.6%, the Nasdaq down 0.2.
This is the tricky part, right, of being an investor. Good when you see upbeat economic data, the economy not falling apart. We got that, thinking.
But it's not Fed friendly.
But it's not necessarily Fed friendly, or it just means, listen, Jay Powell clearly on Wednesday said the peak in the cycle in terms of the raising rates, we're done. We're good. It's just a case of when and by how much the Fed starts to cut rates, right? That's the next move we are expecting to see. And so this is where if you run a company, you've got to figure out, okay, does the Fed get it right, or do we ultimately see some kind of more significant slowdown in economic activity and business activity? All right, Dana D'Oria is back with us, Co-Chief Investment Officer of InvestNet. When all else fails, we just put you on the phone. It works. All right, so we were asking you about kind of the smart discussions you're having with your team about maybe some of the stress points or what are the most important narratives to debate at this point. What are they?
Yeah, and it's a good question for us because we're a platform. We have many asset managers that are contributing to that, 400 billion, 379. So, very much we get to see a lot of different data points. And I would say what bubbles up out of that is a lot of folks who kind of come around to this soft landing scenario just because the market almost doesn't allow for anything else, right? We just continue to go strong. But there is an undercurrent with some of the managers kind of saying, hey, look, guys, it's been about 2 years since the tightening cycle started, and now's around the time when we would expect some cracks. So I think, to a certain extent, everybody is certainly plowing into the market and obviously enjoying the great returns there, but there's definitely an undercurrent coming from, certain parts of the management and, research services around, hey, there are reasons to kind of be a little cautious.
What might those cracks be?
Yeah, so obviously we saw unemployment come in very nicely, and that's the one that you've got to look out for because it's obviously the mandate for the Fed is inflation and unemployment. I think the cracks would be there, right? And so you're not seeing it now. The hours were down in January, which is interesting, but really kind of just suggests let's see what the next month brings. But inflation tending to come in waves, the fact that you still have wage growth issues that could drive higher inflation. The Fed very much firm on the decision not to cut rates anytime soon. And so, those are some of the pieces of that I think are, the market. And then, things like the deficit, the fact that it's going to be a potentially volatile year on the political front, not just in the U.S., but globally.
Dana, are you getting concerned at all by tech layoffs that we're seeing? 32,000 according to layoffs.fyi. In the just so far this year. Does that concern you at all?
Yeah, I think that, big tech has been kind of priced for perfection, and the AI boom that everyone is excited about, while, potentially game-changing, hard to see that really filters into corporate returns in the near term, right? And so it's the kind of thing where everyone getting excited about it, driving up multiples in these companies, but in the immediate term, you don't hear a lot about specifics around how it's going to get into productivity increases, et cetera. Some are there. There's definitely, but we know these tech stocks have been priced to perfection. I'm very much in the camp of, tilting the portfolio a little bit away from there, tilting more, to fundamentals-based price, smaller size, et cetera.
But you're not seeing, just real quickly, 25 seconds, as you said, you've got a lot of investors on your platform. You get to see a lot. You don't see a lot of investors running for the exits when it comes to the mega cap tech, just quickly.
No, I don't. And I also think most people are, if anything, they would let it ride as opposed to rebalancing back, which, you should make sure the ballast is in your portfolio.
All right, good stuff. Thanks, and thanks for jumping on the phone so we could continue the conversation. Dana Dioria, she's co-chief investment officer at Envestnet. $375 billion in assets from all of the investors that use their platform on Zoom from Pennsylvania, on the phone actually, from Pennsylvania.
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. McDonald's shares lower now by 3.7%. McDonald's missed investor expectations in the fourth quarter as growth decelerated, hurt in part by the conflict in the Middle East. Michael Halen is an analyst with Bloomberg Intelligence.
They cited the impact from the Israel-Hamas war, and obviously that hurt results in the Middle East, but also in Muslim countries like Malaysia and Indonesia, and then also countries like France that have a large Muslim population. It may have impacted sales here in the U.S. a bit as well. There were some calls to boycott the brand.
Revenue also came in shy of estimates. Right now, McDonald's shares down 3.7%. Rivals Wendy's down 1.2%. And shares of Restaurant Brands International, QSR, quick service restaurant on the ticker. QSR Restaurant Brands down now by 2.9%. That company, by the way, the parent of Burger King. Caterpillar Bloomberg batted away concerns of a global economic slowdown with higher fourth quarter sales in its energy and transportation business, helping the global machinery maker post profit that topped analyst expectations. CAD up today by 2.1%. Boeing found more mistakes with holes drilled in the fuselage of its 737 MAX jet, a setback that could further slow deliveries on a critical program already restricted by regulators over quality lapses. Boeing shares today down another 1.6%. Some of the other stories that we're following: Estee Lauder rallying after announcing plans to cut about 3 to 5% of the workforce in a restructuring program. The beauty company also improved its sales outlook for the fiscal year, up right now by 12.3%. Those are our top company stories. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
It is Bloomberg Business Week. That's Carol Masser. I'm Tim Stenevec. And February is Black History Month. And every day this month, we are celebrating significant moments in U.S. Black history. Now with your installment for February 5th, here's Bloomberg's Justin Milliner.
Thank you very much, Tim. On this day in Black history in 1990, future President Barack Obama was named president of the Harvard Law Review. That made him the first black person to hold that role in the school's storied history. The appointment led to some publicity for the young Obama, with write-ups on that historic event appearing in the New York Times and in the Boston Globe. This accomplishment is just one in a lifetime of groundbreaking firsts for Obama, none more significant, of course, than when he became the first black president in the United States. After leaving office, Obama returned to D.C. to see his official White House portrait unveiled, and at that ceremony, he spoke about what he hopes young people might take away from his legacy.
When future generations walk these halls and look up at these portraits, I hope they get a better, honest sense of who Michelle and I were. And I hope they leave with a deeper understanding that if we could make it here, maybe they can too.
Obama's achievements reaching the highest heights serve as a positive example for people of color and those from underserved communities everywhere. And that's Today in Black History. I'm Justin Milliner. Carol and Tim.
Yeah, so important, right? If you think about just what he achieved. I have to say, one of my favorite audiobooks, and I know he's written a lot, I'm just trying to think, it was really kind of the one that former President Barack Obama wrote about how he got into politics and his run.
Dreams from My Father?
To get to it
the
wasn't
later
that
one.
It was the later one. I can't remember if it was A Promised Land. Forgive me for not remembering, but it was just...
He's written a lot of books.
He's written a lot of books, but it was a really, kind of inside on politics and what it was like for him.
So I think, I don't know.
Historic run, if you think about it.
Right.
And ending up in the White House.
But I think, remember, he got on a lot of people's radar, not because of the Harvard Law Review, even though the New York Times wrote it up, but I think what happened, I believe it was the 2004 keynote, right?
Speech at the
exactly, and I think everyone was like,
right.
"Wow, who is this
superstar,
guy?"
this guy.
I think that's, I don't know, I think that helped launch him. I don't know.
And that level of visibility, very important for people of color and people from underserved communities, to see that you can accomplish that, you can be there.
Right. Absolutely. All right, Justin, really good stuff. Justin Milliner, thank you so much. All right, folks, don't go anywhere. We're talking the markets beyond the bell. It starts right now.
The knee-jerk reaction, of course, in the markets today was to the downside, whether it was on the back of Powell's comments or on that ISM data. Dow Jones Industrial Average lower by about 0.7%, about 276 points lower. The S&P lower by about 16 points or 0.3%, while the NASDAQ Composite is going to finish out the day lower by 31 points or about 0.2%. But your big laggard here, once again, remains the Russell 2000. Some of those cyclical names, the Russell as a whole, down about 25 points on the day, or 1.3%.
All right, I'm going to jump on what Scarlett said, the semiconductor area, the stocks in particular, really some outperformance there, up about 1.2%. You've got 2/3 of the names, Scarlett, in the index higher. I'm going to get into some of the specific movers, two of them in particular, that have really provided some support to the overall trade today in just a moment.
Yeah, in the meantime, let's take a look at the big picture within equities, and that is your different sectors. 11 sectors you could see overwhelmingly red, materials, utilities, and REITs leading the way down. In fact, utilities and materials each losing at least 2%. The bright spots were infotech, and there's that semiconductor outperformance there, with that group rising 2/3 as a whole, and healthcare finishing in the green by 0.3%.
All right, folks, I'll get to the individual names that really rose today in just a moment, but got to talk Estee Lauder, up 19% at its highs, finishing the day with about a 12% gain, number one gainer in the S&P 500, surging the most in more than a decade, cutting as much as 3,000 positions. We continue to see job cuts. This is part of a restructuring plan to put one of the world's largest beauty companies back on track. Many investors, as we know, would have said this was long in coming and needed. So nonetheless, this was certainly a now performer. Catalent, kind of love this name and the story. This was your number 2 gainer in the S&P 500. Novo Nordisk, its biggest shareholder, is buying Catalent. It's one of the world's biggest drug manufacturing companies. $16.5 billion is the price tag. Novo basically looking for ways to meet the surging demand for those new class of weight loss drugs. They specifically have Wegovy and Ozempic, but I just think, again, this sector continues to excite investors. All right, to the semiconductors we go. On semiconductor, this was top among the S&P 500 and NASDAQ 100. Chipmaker reported fourth quarter results, beat expectations, also gave an outlook that Truist said was better than feared. Fourth quarter revenue also met expectations. And then NVIDIA, sorry, I kind of buried the lead a little bit. At a record again.
You do that a lot sometimes.
I like to keep everybody waiting. Yeah. Closing at a record for the third straight session, top of the NASDAQ 100 among the gainers. Goldman Sachs raised its price target on the name to 800 from 625. You can see the stock closing at I need my glasses, 699 and change. Buy rating, stock is on Goldman's conviction list, but they go into some of the details and some of the concerns that maybe they were about a drop off in data center revenue, maybe not there anymore, but nonetheless, NVIDIA.
This was a good eye test for you.
Okay, to be fair, I couldn't see it either.
It was actually 693, but you were close.
Who was going to say it? Who was going to say? I wasn't going to say it.
I spent 2 hours at my eye doctor today doing all these tests.
Are your eyes still dilated? That could be the issue. That's what I would blame it on.
Change.
I couldn't see it anyway.
800.
Don't worry.
Heart love, Alex.
Hey, all right, I'm going to go with some of the decliners today. I want to start with Tesla, among the worst performers on a points basis in the S&P 500. Shares falling 3.67%. They were down as much as 6.9%. This is all because, well, partly because, I should say, of a report in the German language business publication Handelsblatt that said that the IT giant SAP is removing Tesla from its list of car suppliers. It's because of, according to the newspaper, price list fluctuations make planning more difficult and pose higher risks. We should note that SAP currently has a total of 29,000 cars in its fleet, though we don't know how many of those are Teslas. And I say this decline is partly because of that, because also over the weekend in the Wall Street Journal, they reported that Elon Musk's use of illegal drugs was common knowledge among several current and former Tesla and SpaceX directors. I want to get to the worst performer on a percentage basis in the S&P 500, Air Products and Chemicals, the maker of bottled oxygen, nitrogen, argo, helium, and more, plunged as much as 16%, ended up closing down 15.6%, the most intraday since March 2020. It cut its outlook for the year's adjusted earnings per share, did get a downgrade from Wells Fargo as a result. And then McDonald's shares falling 3.7%, the biggest drop for shares of McDonald's since May of 2022. This after the company reported weaker than expected fourth quarter comp sales, due partly to the conflict in the Middle East. We should say comp sales rose rose 3.4%. According to McDonald's, that's the slowest since the fourth quarter of 2020, below the average estimate of analysts polled by Bloomberg. Revenue also came in shy of estimates, Alex.
Yeah, it's just that expectation game really there. So you have a good global read from both of those kind of companies. All right, let's take a look at the bond market here, because again, you look at these yields and you would have thought we would have held on to that 0.8% decline gain for the S&P, and we did not. That just doesn't show the whole story. For the 2-year, Romaine, over the last 2 days, the yields have backed up on the 2-year by 27 basis points at one time. We haven't seen that since March of 2023, which was around the SVB crisis. So it just goes to show that there's still a lot of oomph there, higher yields. But yet again, stocks somewhat immune, to be honest.
Yeah, at least for right now, those moves, at least over the last 2 days, we'll see if that snaps back as we get deeper into the week, particularly with a slew of Fed speak up ahead. Before we move on here in the program, we do have some breaking news. This earnings results coming out of Palantir right now. The company in its most recent quarter saying that adjusted EPS, and it's always adjusted, coming in at 8 cents a share. The street was looking for 7.6 cents a share. That's on the back of revenue of about $608 million. That's a slight beat over street estimates of 603. Here's your forecast. 1Q revenue, 612 to 616. That is the forecast. The street was looking for 617. And as far as adjusted EBITDA for the first quarter, you are looking, actually, I don't have that number. My apologies there. The revenue forecast for the first quarter is all we have right now.
Yeah, I just wanted to jump in with more on Palantir, because it's really on the AI demand that this company is delivering. And in fact, Alex Karp, the CEO of Palantir, is talking about how he is now 85% focused on U.S. operations and is rebuilding the whole company to meet the growing AI demand. Very much product-driven, AI delivering for this company, which is really a software and analysis company. They do a lot of work for governments, military stuff that's kind of top secret, but AI is coming through in a big way right now.
You know what's interesting? Our own Lizette Chapman has a write-up on these results already out, and she interviewed Alex Karp, the CEO of Palantir, who actually told her that they don't know what to do with the onslaught of demand. Here's what he said, quote, "Our commercial business is exploding in a way we don't know how to handle. We don't know what to do with the onslaught of demand."
Yeah, 85% focused on U.S. operations, rebuilding the whole company to meet growing AI demand. It's bombastic, especially since you factor in that we've never succeeded in building an effective sales force. So he says he expects the company to hold about 2,000 training sessions. I mean, this stock was on fire last year, up almost 170%, and we're definitely seeing that move up in the aftermarket as well.
This always just gives me pause for a second, that meet explosive demand, but then you wind up ramping up capacity, and then at some point, do you oversupply? There is a structural shift, but you still have cyclical, mini cycles, and sort of just take that in stride also.
Yeah, and I mean, Alex Karp, I should say, has always been a little bombastic, if you will. But it's interesting, too, because you get to this idea of the pivot that they've been trying to make away from just being reliant on the U.S. government and some of the other government agencies overseas to more corporate clients. And this AI, at least the way they're framing it, does appear to be that pivot.
Yeah, pretty interesting. Well, nonetheless, investors are liking it, guys, in the aftermarket. Quick check here for everybody, and the stock, up almost 10% here. So the enthusiasm plays out. All right, that's a wrap. Phew, Monday almost over. I don't know about you, but I'm already thinking about
it's not over yet.
It's because of the eye test.
Tell me about it. I'm still blurry. All right, that's a wrap. Our cross-platform, radio, TV, YouTube, and Bloomberg Originals. Have a good evening, everybody. We'll see you again, same time, same place tomorrow.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
All right, everybody, we're going to keep a watch on Palantir in the aftermarket, up about 9.5%. See if there's anything else in terms of what we get on the earnings call. I mean, already a company that's got a PE that's off the charts.
Yeah, this is pretty remarkable.
But yeah, it is off and running. So we'll keep an eye on it.
What did you say it did last year?
167% higher in 2023.
Wow. It did fall 64% in 22. It fell 22% in 21. But what a recovery.
Yeah, so we'll keep an eye on it as we dig into our next guest. All right, everybody. Not easy to be selling investors on China right now, that's for sure. Market sentiment over the country continues to sour, with investors pulling money from ETFs tracking Chinese equities as the country's economic challenges deepen and traders await the government's further efforts to revive its stock market. I mean, the numbers are kind of worrisome to say the least.
Yeah, we track a lot of this stuff here at Bloomberg, and here's the latest, okay? Investors pulled almost $25 million worth of Chinese stocks through ETFs last week, led by withdrawals from the X-Trackers Harvest CSI 300 China A-Shares ETF. That's according to data compiled by Bloomberg. The fund saw assets drop to their lowest level, Carol, since October 2022. That's in the week through Friday, February 2nd.
Right, and China keeps doing different stimulus efforts. Some people say they need just kind of a really massive one to kind of get everybody interested in the Chinese market. All right, so we are very curious what our next guest has to say about all of this. Ben Harburg, he is founder and portfolio manager at Core Values Alpha. They join us on Zoom, or he joins us on Zoom from Beijing, where it's really early in the morning.
5 in the morning. Thank you for getting up.
Thank you.
And he's like dressed up and stuff.
Much better than
like,
I
was
would
this
have done.
Was this a 3 a.m. wake up?
You have jammies on the bottom.
Yeah,
or sweats,
what's going
right?
on here? Thank you.
All right, we do want to point out,
Short.
you've got the Core Values Alpha Greta China Growth ETF, ticker is CGRO. It's been around since October. It's got about 6.7 million in assets. It's down more than 12% so far this year. Ben, brave you. How hard is it doing this investment strategy right now? That was one of the things everybody thought last year in 2023, China would come back. Big disappointment. It's not, and it continues to struggle. So tell us about trying to sell this investment vehicle or sell investors on it. How hard is it?
It's not been an easy couple years, and obviously we came out of a zero COVID period, so we've been physically and financially been battling over the last 3-4 years. But this is actually kind of exciting for us. When the room gets really quiet, when all the global news bureaus are shutting down their China coverage, when investors are pulling money from the market, when our competitors are shutting down shop. And then when you walk on the streets of Beijing and Shanghai and you see still how many people are there, how robust the trade is, and still how inextricable China is from the global supply chain, you sniff some kind of an arbitrage opportunity.
Okay, so tell us,
the fact that people aren't running.
Ben, tell us exactly what you're seeing on the streets that gives you this thesis, or that gives you ammunition for this thesis, because it's not the same thing that we're hearing from everyone.
And where specifically? Is it pockets?
Well, we don't have to be China. We don't have to kind of be China macro apologists, right? I'm not going to sit here and try to sell you on China's sustained 5% growth year on year. What we are excited about are those pockets of growth within China that are seeing a huge opportunity. So the likes of Temu or Shein, these cross-border e-commerce players, anyone that does kind of cross-border China supply chain is thriving over the last year, and I'm sure you'll see some of their commercials over the Super Bowl next weekend. Chinese core technology chip companies are doing very well now as they accelerate that decoupling from the U.S. So you've got to pick your spots, but within those growth areas, you're going to see a lot of opportunity.
Okay, so go ahead, Carol.
No, go ahead.
I was going to say that your top holdings include Tencent, Alibaba, Trip.com. How do those play into the thesis that you're telling us right now? Because I don't see necessarily chip companies in there or those apparel companies that you spoke about.
Sure. I'm talking China more broad macro. So Tencent to us is a bellwether for the economy. It's, again, it's ubiquitous. The WeChat platform and all the super apps, the e-services super app that it kind of contains, which includes the likes of Pinduoduo, Meituan. And as you know, Tencent is also an investor in all these businesses. So they have a stake in Pinduoduo that I think exceeds $26 billion. So you can kind of look at them as a proxy for a lot of those names and movements I just mentioned. Trip.com factors into one of our thesis, which is, well, the Chinese are not going outbound anymore in their travel because they're kind of reserving and keeping money closer to home. They are traveling domestically. And so domestic brands, domestic travel destinations are still doing very well. And then Ali is, again, a global cross-border player, as well as obviously a dominant player in China, and one that we think is just massively mispriced.
Where should it be priced? I'm looking at ADRs at trade here in the U.S., so we're talking about 74 and change, but give me an idea of where you think they should be priced.
I mean, at a market cap level, our thesis is that it should be at least 2 or 3 times from where it is today. And that's, again, off of the back of its, where it trades relative to earnings per share, the growth in its GMV and its overall revenue relative to its share price, which is now below its IPO price. Just the fundamentals aren't there to justify the current valuation. You saw a nice little bump up today, and I think you'll continue to see that as the numbers come in.
We get earnings on Wednesday before the market opens. So what specifically among the headlines that will be crossing the Bloomberg, what are you focusing on from that company specifically?
So we're looking at the growth of their new business lines, cloud, advertising. The Chinese technology giants also all have an AI angle, so things that are more asset light. I think you'll see some growth there. So we're looking at those kind of, as they try to wean themselves. They've even made some announcements about jettisoning parts of their business, their logistics business, their food delivery business. So some of those more kind of handling atoms rather than bits businesses, we'd like to see those go away and then focus on the asset light side of things.
Let's talk EVs and BYD specifically. Curious about your outlook on BYD. Certainly, we saw some pretty impressive delivery numbers, but now BYD seems to be facing some of the issues that some of the other EV manufacturers are facing, whether they're pure play like Tesla or companies that are trying to get into it like Ford.
Again, we really like Chinese companies that have this integrated supply chain. BYD has been actually a kind of a slow grower, not necessarily a household name outside of China, not seen in the dealerships around rural New Jersey or wherever you're living today. And as a result of that, didn't have that same kind of name brand appeal that the likes of Tesla or even maybe a NIO had, which was better at marketing and branding. But obviously, with the surpassing Tesla as the world's largest EV maker, and again, our thesis that China will continue to make up more than 50% of the global EV market, I think you'll see still sustained growth there, and they'll start to expand more and more into emerging and mature markets under their brand name.
PDD always is popping up among either the biggest hit or the biggest gainers whenever there's kind of dramatic moves in the overall Chinese trade. What is it about that one that you particularly like? And I know they're playing in the retail space. What is it though?
We love their global cross-border e-commerce app, which you guys know as Temu, and I think a lot of American consumers might not even know that it's Chinese built. This is an application that has kind of gamified and made accessible what used to be kind of just within the bounds of, say, Costco or Dollar Tree or Dollar General. So kind of these good products at very low, almost astounding prices, in a fun shopping format. It took China by storm. It already surpassed Alibaba, obviously, in market cap, but it's now coming for the hearts, minds, and wallets of Western consumers. It's going against everybody. It's going to take on obviously the fast fashion players, but also the likes of Amazon, where it will go after kind of the fulfilled by Amazon.
Ben, is there a big macro shift in how you think about the Chinese trade? Is it much more domestically focused to the Chinese market, looking for names that are going to benefit on Chinese, or no, is it still Chinese names that benefit globally? And forgive me, but just got about 25 seconds.
We split the two. So again, we like Chinese brands like Anta, or those that are kind of selling clothing or domestic goods, as well as those that are focused on domestic travel. But then again, we still really love these cross-border names. So we're looking forward to a Shein IPO later this year. We see that in PDD. We see that in Alibaba.
All right, gonna leave it on that note. Hey, listen, thanks, and thanks for staying up late. Really appreciate it.
No, getting up early.
Or getting up early.
Yeah, unless did you pull an all-nighter, Ben, or did you get some sleep? Okay, good.
Okay.
Glad.
Well, you look pretty perky. I'm impressed. Ben Harburg, he's founder and portfolio manager at Core Values Alpha, talking names with us, which we always like. Joining us on Zoom from Beijing.
Yeah, 5:17 in the morning.
That's early.
Bloomberg World Headquarters, I'm Charlie Pellet. 4:21 the time right now on Wall Street, and we begin with a headline right off the Bloomberg Professional Service here involving Microchip. It is going to be reducing the salary of its CEO and executive staff members by 20%, so pay cuts for top executives at Microchip. Turned out to be a down day for the Dow, the S&P, NASDAQ 100 index, Russell 2000 as well today. Traders sent bonds and stocks down. Strong economic data reinforced the view that the Fed is not ready to call victory over inflation just yet. S&P down 15, drop there of 0.3%. Dow Industrials down 274, down 0.7%. And the NASDAQ Composite Index fell 31 points today, drop there of 0.2%. 10-year yield, 4.16%, with a 2-year at 4.47%. Gold down 0.7%, $20.24 the ounce, while West Texas Intermediate crude was up 0.7%, $72.79 a barrel. Bitcoin right now, 42,359. Bitcoin today down by 0.9%. Gap has named fashion designer Zach Posen as its creative director with direct responsibility for its mass-market Old Navy brand. That is a big step in the new CEO's turnaround effort. Again, recapping, stocks lower today. S&P fell 15 points, a drop of 0.4%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thanks so much. Well, the IPO market in 2023 was a lot like it was in 2022, and that
that's great, right?
No.
Oh, not so good. Okay. All right.
Not good. Capital raised last year was 8% higher than that of 2022. So there was a modest improvement over 2022's dismal year. That said, last year's capital raised, Tim, represents less than 8% of the nearly $339 billion raised in 2021, which was a record year.
Okay, there's a long way to go for a recovery. Yeah, that is some perspective. Hey, for SPACs, it was even more grim. The IPOX SPAC index, it's a benchmark for the sector, was down 24% in 2023, excuse me. That was after the 16% decline in 2022. SPACs, fair to say, Carol, are falling out of favor.
Yeah, exactly. So let's get to what this year is going to look like. We're back with Isabel Friedheim. She is CEO and founder of Athena. It's an all-women network that provides financing to late-stage private companies. Isabel, good to have you back with us. It's been a little while, and curious what you are seeing on the IPO front specifically. Let's start there.
Carol, the capital markets are desperate for exits. We in our industry, venture capital and the private markets exist for the opportunities to take companies public and exit our investments. And there's a huge backlog of companies that have been waiting to go public for years now. There've been a few that came out in the fall, and we're seeing now a number of filings again. But we are not back. And if we take a step back, the markets are actually pretty good. We hit an all-time high a few days ago. Economic indicators are good. Payroll, GDP growth, inflation is starting to come down, and we're starting to see the effects of rate cuts that happened a year ago. So overall, the economy is good. So
why isn't it happening? So why isn't it happening in your view?
Exactly.
What are people telling you? Yeah.
Yeah. And so I think there are still a number of headwinds. There's volatility with geopolitical uncertainty. And a lot of it has been surprising. So it's been Ukraine, Israel. These were all surprises. There's been, there are question marks around Taiwan. There are surprises in the U.S. on the political front as well. And that creates volatility. The markets do not like volatility. It's a challenge. And it creates uncertainty for companies when they do go public.
But yet you have something like Immerse Sports that went public last week. So companies do go. Like, I get the laundry list of risks. We talk about them all the time. And yet companies do squeak through and come to market. And I guess that has to do with, balance sheet, strong opportunities for growth. I mean, so I'm curious, what in your universe are you seeing that you think does have some hope of kind of getting through this year?
But we're seeing a real change in the types of companies that go public because performance hasn't been good. And especially if you look at, you mentioned SPACs earlier, but a lot of companies, and it's not just SPACs, it's SPACs and IPOs, companies that are capital intensive, that have high burn rates, have not performed well in the last couple of years. And what we're seeing is the discounts that investors expect and that they have traditionally enjoyed when they participate in an IPO is not adequate right now because performance hasn't been good. So yes, we are seeing companies going public and we are seeing IPOs, but the performance has been poor. And so why, if you're an investor, why would you want to deploy capital in an IPO if you can wait knowing it's going to go down 20, 30% like some of the IPOs have performed in the fall? So you'll hear that the IPO market is back, and yes, there has been activity. We expect higher levels of activity in Q2 around April. But overall, it's going to slow down when the elections happen in Q3, Q4.
So you work with companies, right, to provide financing, especially for those companies that are at late stage. So are you having to tap more private markets, private investors, family offices? What are you doing for those companies that are in your orbit?
Yes, we deploy equity capital into growth companies that are about to go public. And there's no question, there's a lot of dry powder, both in the public and private markets. And there's a backlog of companies looking to go public. And we invest now in companies that are enjoying attractive growth with secular tailwinds. That's important. Attractive margins and cash flow. So we have pivoted to answer, because we take our companies public, to answer the needs of the public equity investors. And again, there's a lot of dry powder. And I think that once the clouds of uncertainty lift, coupled with restored confidence, regulatory detente, which is also a tail, and I think we'll see an explosive deal market, but I don't expect that epiphany to happen until early 2025.
What brings on that epiphany that you call it?
It's a settling of.
Is it just we're waiting for it?
Yes, it's a combination of geopolitical risk, as more stable interest rates, and then all the other risks that surround public exits and the formation of capital formation in the private market and the public markets, and that includes things like federal spending, the regulatory environment. We're in a challenging regulatory environment for companies that are looking to go public. The current administration has really increased the regulatory burden on companies wanting to access the public equity markets. And that's really throwing cold water on the attractiveness of what is the deep pool of capital in the world.
Since you focus on women, and women already, we know, we talk about it a lot at Bloomberg, at a disadvantage often when it comes to the funding environment overall. So if the environment is tricky, you can't take them to market, or at least IPO, or spin them off into a SPAC or something, does it mean that you're seeing a lot of female entrepreneurs not being able to access the money they need to kind of continue growing their businesses?
First of all, let me say that we don't just invest in female-founded companies. We'll invest in all companies. Unfortunately, that would be too restrictive of a set of companies that we would have access to. We are women leading the fund, the growth fund that we invest from. But to answer your question, yes, unfortunately, it is often the case that when capital formation slows down, minorities are heard first.
I want to go back to what you're thinking about when it comes to the macro environment here and about the feasibility of continuing with SPACs, given the data that I talked about and the appetite for SPACs has been drying up. Do you think SPACs are still a useful vehicle?
I think they can play a role for certain companies. So as I mentioned earlier, we now focus on companies that answer the needs of public investors, and we structure products that that provide downside protection and that nonetheless provide protection for investors, but also capital for companies. And this has dramatically changed. So we now focus on companies that are profitable. We're taking public a company that has EBITDA, and there tend to be more boring companies, but that is what the market wants now. So I do think SPACs continue to play a role for companies that have been waiting to access the public equity markets and haven't been able to, and probably won't be able to in the next couple of years, because when the market recovers, we'll see larger size companies go first, better, high quality, larger. That's where the fees are for the banks. That's where, that's what investors want to see. I think generally speaking, the banks also don't want to ruin the opportunities to take companies public, bad companies public. And so we'll see companies that are better quality go public first.
Hey, just got about...
So for that reason, SPACs continue to play a role for the smaller size companies that want to access the public equity markets. A good example is companies that want to make acquisitions and they want to be publicly traded to use public stock to make those acquisitions. And there are many other examples, but SPACs continue to play a role, and there's a much smaller number of SPACs now that are lined up for success.
All right, going to leave it on that note. Isabel, thanks so much. Isabel Friedheim, she is CEO and founder of Athena, all-women network that actually runs it and provides the financing to late-stage private companies. So forgive me, for some reason I thought it was all in women-based or entrepreneurs, but good to check her out. Ticker ACAQ.
Hey, shares of Palantir up right now by 14.6%, Carol. Taking a look at the company reporting its first profitable year, it cited big AI demand. Net income of $210 million. Once again, its first year of being profitable. Analysts were estimating $194.5 million.
I mean, that's a tear. I mean, in the
you know,
aftermarket.
I was going back and looking. This is a company that is not yet back to its post-IPO high.
Yeah, not surprising.
Yeah, so if you go look at 5 years on the terminal, it's like, you know, going back to what, 21. That's $39 a share.
Perspective. All right, let's get some perspective on what's going on when it comes to world and national news. Off to Nancy Lyons we go. She's in D.C. Hey, Nance.
Hey, Carol. Republican presidential frontrunner Donald Trump and House Republican leaders are denouncing a bipartisan Senate deal to impose new U.S. border restrictions and unlock billions of dollars in Ukraine aid. House Speaker Mike Johnson says it just doesn't go far enough.
I just don't believe that the Senate bill, as I've explained in all of our statements, meets the criteria that's necessary to solve the problem.
Johnson says the Senate proposal is a waste of time and is dead on arrival in the House. Well, the House does plan to take a vote tomorrow on whether to impeach Homeland Security Secretary Alejandro Mayorkas for his handling of the border. The two impeachment articles accuse him of refusing to enforce U.S. immigration laws and breaching the public trust. The Pentagon says it is still looking at what happened with its attacks on Iranian-backed militias in Iraq and Syria.
We currently assess that we had good effects and that the strikes destroyed or functionally damaged more than 80 targets at the 7 facilities.
The Pentagon spokesman, Major General Pat Ryder, says this is just the beginning of the retaliation against the groups who left 3 American soldiers dead and dozens wounded. King Charles has been diagnosed with cancer. Buckingham Palace is not revealing the type of cancer or the prognosis, but they did say the king began regular treatments today. The 75-year-old had a benign prostate procedure over a week ago, but the palace says this is not related to that. It does say that King Charles will pause his public events, but remain head of state. The Supreme Court will hear arguments this week on Thursday about whether former President Trump should be removed from Colorado's primary ballot, a case which will have implications for other similar efforts around the country. The argument to keep Trump off the ballot is that he violated the Constitution by committing insurrection January 6th. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
From Bloomberg World Headquarters, I'm Charlie Pellet. We're keeping an eye on shares of Palantir Technologies. After hours, the stock is surging after saying that demand for its artificial intelligence products is driving sales at the company. It also gave a higher than expected profit outlook for 2024. After hours, Palantir up now by just about just turning lower now. We've got Palantir Technologies down 1.8%. The Dow, the S&P, NASDAQ all declined today, with the S&P 500 index down 15, drop there of 0.3%. Dow today down 274, down 0.7. NASDAQ down 31, drop there of 0.2%. 10-year yield 4.16% with a 2-year 4.47%. Gold down $15 the ounce to 2024, decline of 0.7%. While West Texas Intermediate crude today up 0.8%, 72.81. So on a back to work Monday after a rally last week, we had stocks moving lower today. Dana Diori is co-CIO of InvestNet, and right here on Bloomberg Business Week, she told us it may be time to be a little more cautious.
I think, to a certain extent, everybody is certainly plowing into the market and obviously enjoying the great returns there, but there's definitely an undercurrent coming from, certain parts of the management and, research services around, hey, there are reasons to kind of be a little cautious.
And again, recapping, move lower today for the U.S. stock market. S&P today down 15, drop there of 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, the most read story in the Bloomberg today about everyone's favorite topic, not if you're a parent and your kid's getting ready for college or thinking about it. We're talking about standardized testing.
Or if you even took the SATs or the ACT.
You want to know, I was kind of one of those people who actually liked kind of some of the standardized testing.
Are you joking?
Yeah, I'm a nutcase.
Are you joking?
Yeah, no, I'm not. I'm not.
You like Saturday morning, going to a classroom and taking...
I don't know. It's a little weird. I know. Yeah,
okay.
I'm a nerd. Yes, Elizabeth, one of our producers. I'm a nerd. But it's also become like a business. Anyway, let's get to Janet.
Yeah, Janet Lauren is higher education finance reporter for Bloomberg News. She's here in the Bloomberg Interactive Brokers studio. We're talking about this because as of today, Dartmouth College comes out with a statement that says it's again going to require standardized testing for applicants following MIT. This is a big reversal from what happened just a couple of years ago, Janet.
Yes, it is a big reversal. During the pandemic, nobody could get to test sites. They were closed. So everybody said no testing is required. MIT 2 years ago about this time said we really need kids who can do well in math, and they reinstated it. And of course, MIT has really difficult requirements, 2 semesters of physics, 2 semesters of chemistry, lots of math. So it makes sense. So it was interesting when Dartmouth this morning said that they were also going that route. And the chatter for decades has been the SAT is unfair, especially for low-income students who can't afford test prep. And now you're hearing that is an argument to keep the test.
That's what we don't understand.
So explain that.
So let's say you're in a school that is not familiar to Dartmouth. Of course, they know the Scarsdales and the Mamaronicks and the New Triers of the world. But, they're trying to find kids. We did a story about rural recruiting. Perhaps high schools they don't really know well. And it helps them to know what their score is. It helps them to know what the high school is. So let's say you score 1,200 in a high school where the average is 1,000. You've done really well in that high school, but of course you're far below the median at Dartmouth, but the information that the test is giving is you've actually really exceeded expectations in that high school.
Sorry, I just have...
No, go.
Okay, this is just related to what Janet said very briefly. I didn't know that schools could actually see that part of the data. You're saying they don't just see the raw score, they also see how you did compared to other folks at your school?
So every high school has their own profile, and it's a lot of information.
Yeah. Data. Tim, this is a data world
we're
living in.
When we did the story about rural recruiting that we talked about, we mentioned a school in Wichita, Kansas, where the majority of students are on free and reduced lunch. So that tells you you're dealing with a very low-income population. So if you see a student who has rocked the SATs and most of their peers have not done well, it gives them some information in that context.
Janet, having said that, though, they still have parameters, right, of where they want you to hit in terms of scoring. Like they're going to say, wow, tough environment, look what this individual did. Having said that, in MIT, where math is really important, right, and that computational way of thinking, are they still going to have kind of minimums of like where they want someone to hit? You know what I mean? Like,
Well,
I'm trying to
it
understand
depend-
how they use it.
So it depends on where you're coming from. If you're applying from Andover, or again, a really wealthy school district, and you have a 1,200, that's not going to cut it. But if you're coming from a place where most kids are not going to college, again, they're trying to find socioeconomic diversity.
Which is great.
And they're trying to find, students, Bill Fitzsimmons, the dean of Harvard, used to talk about the diamonds in the rough. And that's why they mail to so many kids who might think of applying to Harvard. And they're trying to put it in that kind of context.
So is this just the beginning, like the dominoes start to fall? I mean, I feel like there's so many things coming off the pandemic, work from home,
Right,
standardized.
exactly.
Like we're all just like, yeah, okay, get back to work. And oh, guess what? Standardized testing, we're going back to it. Is it also part of, I was thinking about these schools, especially once testing went away, we're getting so many applications. It's gotta be a difficult process to kind of go through them, especially if you don't have standardized testing to kind of help you in figuring
You just
out.
arrange it by how much your parents gave. That's how you do it. That's all the admissions. I'm sorry.
Yes.
I joke. I
Hashtag
kid.
sarcasm,
I kid.
love,
I kid.
love.
So yes, it is. Yes, they do get a lot of applications, and you can't really feel sorry for themselves because they
No.
did it to themselves,
And they make money off of them, every application.
They do, and they're also, they're also buying the names of kids who take the test to try to encourage them to apply. I mean, that was our story like a decade ago, and believe it or not, nothing has changed.
So Carol asked about the dominoes falling. Is it just MIT at this point and Dartmouth that are requiring standardized tests again?
Well, we'll see. Other schools have not, are still requiring them, like Georgia Tech. There's a bunch of SEC schools.
Were there schools that didn't remove them?
I think pretty much everybody at the height of the pandemic didn't require them.
Such a big deal.
But because you couldn't get to the testing sites. But like University of Florida, University of Georgia, they've still required them because they give away scholarship money based on your test score. And they give, if you are a Georgia resident or Florida and you do well and you hit the parameters, you can go for practically free.
And I will say, anecdotally, during the pandemic, individuals who did file test scores did see like scholarship money come, versus not. It's really interesting, and I'm just.
So it was optional.
It was totally optional, and a lot of advisors at high schools were like, "Why would you do it? Why would you put it in, even if you did good or even better than good?"
Right.
Like,
Now,
it's just interesting.
But also keep in mind, so we've had a couple of years of them being optional. Who's gonna submit the score?
People who did well.
People who did well. So
Right,
what does that do to the
exactly.
average?
Raises the average.
Raises the average.
All right.
That's interesting.
Math.
You know, I should have done very well on my quantitative, based on your questions just now to me, Janet. I should have done well on my quantitative.
I did not. I did okay.
Do you want to do anything more? Because there's more stories.
Yeah, go ahead.
All right, so you've got a couple of other story about Harvard's top governing board picks. Also, though, about governments looking to maybe tax endowments. Go where you want. We will bow to your brain and where you want to go here.
Okay, so Harvard is a big target with $51 billion. It already pays taxes to the federal government. That happened in 2017 with the Trump tax bill. And now Massachusetts is eyeing it. They would like a little piece of it too. There's two bills that may move forward this week. One would have a 2.5% excise tax on the value of the entire fund. The federal one is on the investment returns. And that could bring in, are you sitting, $1 billion in the state of Massachusetts, and that would fund free college for everybody in almost 30 campuses.
What a great thing.
Can't move to Florida, Harvard.
What great. That's
Good one.
We're the Florida answer to so much.
Can't do it.
Is that likely going to go through?
I don't know. But, there's one thing that Harvard has done is it's in some ways the Republicans and Democrats are very upset with what's been going on anti-Semitism on campus. I mean, who would have expected that Harvard could in some way unify lawmakers?
Yeah, that's really funny.
It's like Harvard and social media companies.
Isn't that crazy?
Right, are the things that unify members of Congress.
Yeah, and China.
Yeah, China.
So we'll see if they go forward. The second one is also a tax for schools that have legacy admissions in Massachusetts, which MIT does not, and that would give money towards community colleges.
It just means you have to come back. It's already a busy year for you. A lot going on. All right, Janet Lauren, thank you. Higher education finance reporter at Bloomberg News. Check her out on Twitter, X at Janet Lauren, and then at Bloomberg.com.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. A headline from the Bloomberg Professional Service. RTX Corp is being probed by the SEC over the GTF jet engine recall disclosure. Gap has named fashion designer Zach Posen as its creative director with direct responsibility for its mass-market Old Navy brand, a big step in the new CEO's turnaround effort. Posen is known for outfitting celebrities in his own label. Previously, he was the women's creative director at Brooks Brothers. He will work closely with Gap CEO Richard Dixon and serve on the executive leadership team. Today, Gap shares advanced by 0.8%. Caterpillar managed to push away concerns of a global economic slowdown with higher fourth quarter sales in its energy and transportation business, helping the global machinery maker post profit that topped analyst expectations. Kristen Owen is a senior analyst at Oppenheimer, and she spoke about the pricing outlook for Caterpillar this morning on Bloomberg Television.
So 2023, really strong pricing, 9.5% for the full year. 2024, earnings are going to have to be driven more by profitability or by productivity, by cost controls, because we're looking at something that goes from 9.5% to just about 1.5% for the full year 24. Really puts that emphasis on productivity.
And CAT shares, by the way, this year they are up 8.7%. Today they advanced by 2%. Also after the bell, we heard from Palantir Technologies. It said demand for its AI products is driving sales at the company, and it gave a higher than expected profit outlook for 2024. Shares up now by 12%. Those are our top company stories at this hour. This is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, everybody. Monday almost in the books, on the books, whatever you want to say.
We're getting there.
Tim and I getting ready to wrap up the Monday edition of Bloomberg Business Week. But don't go anywhere, because joining us right now is Doug Krisner of Bloomberg Daybreak Asia. You guys are going to be talking about the Asian market over the next few hours. Or in a couple of hours, I should say.
3 hours from now, yeah.
3 hours.
So we're going to be talking about a lot.
Yeah.
Monetary policy here in the U.S., I think, is key, because what we saw overnight with the Powell comments that were aired on 60 Minutes.
You covered it a lot yesterday.
Yeah, we did. It was very interesting, because what we were learning when they started breaking down details of the interview is that Scott Pelley was the interviewer.
Right.
And apparently, as part of the package that aired on the program, he had a voiceover saying that Powell said to him that he was going to begin, or the Fed would begin to cut rates mid-year. But there was a transcript that was released of that entire conversation. It didn't show up in the transcript.
Carol said the exact same thing to me
there
a
was
few
a bit
hours
of a
ago.
discrepancy.
It was really confusing.
Yeah.
Because I felt like there were some things that were tweaked a little bit based on, I think, what Scott Pelley said.
Right.
And then I was like, oh, okay, so he built a little bit on what we got on Wednesday. And then it was interesting to read that.
Right.
Yeah.
So to your point, I mean, about Wednesday of last week, this idea that we're not going to get a rate cut in March. I mean, Powell basically made the same statement last Wednesday.
Yeah.
So he kind of reiterated that. What are you shaking your head?
Well, I'm shaking my head over a couple things. One, just a reminder to everyone how closely everybody hangs on to every single word.
Of course, everything.
Right. Everything.
Every tone,
It doesn't matter if it's Fed Chair Powell or a voting member. And the other part, Doug, that I'm interested to hear from you,
But
because I've kind of
especially
been...
when it's Jay Powell.
Well, especially.
Like if he alters a word, right? We're
Of
like,
course.
oh my God, what does that mean now? Sorry.
Did you find that, apart from what you just said, did you find anything different in the narrative or what he said from last Wednesday?
Nothing in the narrative per se. I think the issue is timing, right? And then you get the ISM. I mean, because we had the employment data last Friday, which, okay, March basically is now off the table. That's what Mohamed Arian said on Friday of last week.
Right.
If you look at the swaps market, I think as a result of the jobs data, the swaps market was only pricing in a 15% probability of a March cut.
Now,
It's, well, be careful, because if you're looking at Fed funds futures, that's the WIRP function.
I'm looking at WIRP.
Okay, that's the futures contract,
Okay. Right.
which is not as volatile as the swaps market is when it comes to try to price, Fed action. So there's a little bit more volatility in what the swaps market is telling us right now.
Mike,
Go ahead.
Oh, God. No, please.
So I think that, right now it looks like maybe June, maybe Pelly has it right, and that May is off the table.
Right.
Because you look at this ISM services data today,
Why would you cut rates right now?
And then the SLU survey, right, from lending officers.
Yep, we talked about it.
Standards are coming down. There's still a fair amount of loans that are being made right now. So liquidity is finding its way into the economy. And I don't think that the Fed, this would argue in favor of, at least in what I'm reading, the commentary, just steady Fed policy for a while longer.
If the Fed thinks, okay, the economy is already the gas pedal, we're like pressing down and things seem okay, we're moving along, why would you want to provide too much momentum where you go into overdrive? Having said that, I just want to go to our Michael McKenzie, rates reporter at Bloomberg News, took us back to the dot plot that we got in December and saying, 3 rate cuts?
That's what the dot plot
are the
said.
basis for the year. And that to me almost feels like that makes sense in terms of how things are playing out right now. If you start to look at the meetings and how many we have, and then you have the election, like you gotta, I don't know.
So another day of dollar strength. I didn't even see. Liz McCormick had an interesting line. I think the guys on the MLive blog picked it up. Over the last 2 days, Friday and today, that the move up in yield and or flipped around and said another way, the move lower in price on the 10-year is the most dramatic that we have seen in some time.
Everybody's talking about volatility. We can